Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is July 20th. And let's check out these charts. Look at this, guys. A really nice play on bonds right now. We're trading right at 103 even this morning. Support's coming in below us right here at about 102.40. And we got resistance, well, guess what? Right at 103. So where bonds closed today, and you hear me say this quite often, where bonds closed today is going to be a pretty big factor. If you see this, the way these candlesticks work is we actually opened, if you look at my mouse right here at, let's just say 102.95. And we actually broke 103, but then investors sold off and we're down to trading right at 103 again. So here's the scoop. We do have an upward trading channel. And so if you look at my mouse, it's too bad it didn't show up here, but you can see this upward trading channel if you look at where my mouse is at. And if we can close above 103 today, that means we're going to see room to trade as high as 103.40, which will bring us back to some of the rates that we actually saw back in late May and early June. So that's kind of a big deal. Now, couple reports today that were not so bond friendly, leading indicators and jobless claims. Jobless claims came in about 12,000 people better than expected. And the boss, also known as the Philly Fed, that came in today, but that was a big miss. The boss is basically a manufacturing report that comes out just to kind of figure out the state of manufacturing in the U.S. and how it's doing, and that really was a pretty big miss on expectations. So and obviously in the economy, if you have kind of dreary news on the manufacturing side, people are going to draw back from stocks and put their money more in bonds. So that's actually assisted some of our trading today. Anyway, moving on. As far as news, we are continuing to see our government invest in bonds, and so that was obviously very helpful. And the Japanese stimulus is still continuing. Again, guys, global economy, so Japan, Europe, all of that impacts our bonds, okay? To kind of quantify where we're at, last month, Freddie Mac, the sources seen down below, reported that the average consumer received a 3.9 rate at about half a point. If you look at bond trading last month, we were averaging right around 103.20. So if right now we're averaging 103, that means the average consumer, instead of paying half a point for that, might pay something closer to 0.7 points. So not quite as good, but we are picking up a little bit of ground from where we were last month. So let's move on to projections. So my last projection was a hit, but just barely. If bonds actually trade a little bit above or close above 103 today, it will actually be a miss. So maybe I lucked out doing this report when I did. But the analyst outlook is pretty inconsistent on the short term. One analyst is pretty bullish. The other analyst is kind of neutral. Here's what I say, guys. One of the beauties of being West Coast, if you are West Coast, is the markets close East Coast about 2 p.m. So we get to see when the markets close, and then we can actually, determine whether or not we want to lock in our rate after 2 o'clock. So this is kind of a cool little thing that we can do. And I would say if we close above 103, if it was me personally, I might float. Safest thing to do is always lock, but I might float just to kind of see where this upper trading channel would take me. So, but as far as analyst outlook, it is pretty consistent, neutral and long term. I don't think the analysts think it's going to improve a whole lot. Plus, it's kind of foggy, guys. It's hard to see long term. I mean, there's so many variables that come into play. But here's my forecast. I think bonds are going to range between 102.60 and 103.20. So I want to give it a little bit more room. And bonds could hit as much as 103.40, but I just want to try to keep a little bit tighter range. So I'm going to say 102.60 to 103.20. That's basically room for a loss of about almost half a point and room for gain of almost a quarter point. So, we're right. I think we're kind of at the top or closer to the top of the trading range, but let's see where it closes out after 2 o'clock today. Okay, guys. So that's it for now. I'll let you know how everything went next Thursday. Feel free to contact me in the meantime. And hey, we'd love to hear from you guys. Leave your comments down below. Everything likes to be liked, so does this video. And if it's your first time on the channel, click on that guy on the left. That will get you subscribed. Don't worry, nothing crazy happens. You'll just get a little notification when we release a new updates, which is generally every Thursday. And at the top right is Mortgage Bonds 101. So if you listen to this and you're like, what the heck is this guy talking about? I just want to get a good rate. Click on Mortgage Bonds 101. That'll teach you the basics that you need to know as a consumer when trying to figure out the best time to lock in your interest rate. Okay, guys, that's it for now. Have a great weekend. We'll see you next Thursday. Bye-bye.